Let's break down the biggest shocks and the standouts of the year. Anushi is here with the details.
3 year of analyst hits versus misses. If we just take that in context, now it's a sustained trend that we are seeing where the hits have surpassed the misses that we've seen, and this is not a trend that is recurring quite often. It's after a decade that we've seen this trend now coming in picture. Now this trend marks sustained phase wherein analyst targets have proven to be conservative basis, and this. But despite this overall pretty picture that we are seeing for 2025 and even for 22 to 25, the 3-year context, Nifty this year has underperformed that of the emerging markets, other markets that we are seeing in place. In fact, if we just take the 2025 into context, 29 stocks have beaten the analyst targets, wherein 18 stocks have missed analyst targets. Let's put that in a proper data manner. If we just take 2012 to 2014 in consideration, you'll see that the beats have surpassed the misses, but that's not a trend that you'll see something continuing from 2015 to 2022. In fact, 2022, if you just check out the levels over here, that's significantly lower over here. If you just take the next one in concentration, about 10 beats, however there were 38 misses, but after this there was a reversal which was seen in the last 3 years, that's 23, 24 and 25. Do note that the stocks that we have taken here is with analysts, at least 10 analysts covering a particular company. So that is what we have covered so far, but let's talk about the biggest misses in 2025. So if we are just taking that in context, and by what margin have they missed the analyst expectation? Right at the top we have something like a Tata Motors passenger vehicle. Along with that, we have Trent and TCS. Starting with Tata Motors PV, why this kind of a decline that we have seen over here? This is the kind of decline that we've seen. 38% to 27% is the gap that we are seeing. For Tata Motors PV specifically, what's been a pain point for the business is the overall outlook in terms of where the Jaguar Land Rover is concerned. In fact, there was a sharp cut in the JLR margin guidance as well, which weighed on the sentiment. Along with that, US tariffs, weaker demand coming from China and Europe are other concerning factors which led to that particular decline that we are seeing. Considering trend, now this one was maybe a shocker or not a shocker, you can take it in that context, considering that they have fallen over 40% in 2025 after seeing a 136% rally in 24. Slow revenue growth had triggered this first annual decline seen over the last decade that we are seeing. Coming to TCS now, what's the miss that we are seeing? Of course, IT had been under pressure regarding the US macro uncertainties that we've seen. So global demand uncertainty, layoffs and restructuring raised concerns. Along with that, there were also regulatory risks, including proposed $1 lakh of H-1B visa fee cap that we are seeing in effect. Along with that, if you just take what's on the other side and which were the biggest hits for 2025, Eicher Motors, Shriram Finance and Maruti Suzuki come right at the top. In fact, Nifty Auto, if you see, has been one of the top performers in the sectoral pack as well. They've beat the estimates by 47% to 22%. But let's start off with Eicher Motors. Why this beat? Particularly, firstly, record earnings is what we've seen in this year, along with strong Royal Enfield sales. Along with that, even favorable GST rate cuts and rising global demand has aided the kind of performance that we are seeing for Eicher Motors. Moving on to the next stock in focus is Shriram Finance, and the main focal point here is what has happened in this particular month itself. That's the MUFG acquisition of 20% of stake in the company. So this is a strategic investment that the street had been excited about for quite some time, which would aid the financial performance and the overall capital adequacy also going ahead. So that's on Shriram Finance. Stock has seen a subsequent rise in the stock price as well. Coming to Maruti now, expectations of GST cuts for the small cars and improved festivals sales improved the overall sentiment. Along with that, higher exports and better product mix, which would tilt towards this SUVs, has also aided the kind of picture that Maruti has. So this has led to a strong beat in terms of where the analyst expectations for the target price were concerned. So these are some of the biggest hits and some of the biggest misses that we've seen for 2025. And overall, if we see the picture, it's a strong year of beat that we are seeing versus misses for the overall Nifty 50 pack as well.